Hello and welcome to this segment of the video training for Monitor's annual plan return. In this part I will be taking you through revenue generation schemes, which some people will use the term income SIPs for. Effectively, a revenue generation scheme or income SIP is a set of changes which will increase the surplus of your trust by both increases in income and increases in costs. They are separate from SIPs and they're on a separate sheet. I will show you that. We have the SIPs sheet here and the revenue generation scheme sheet next to it. Again, as per most of these sheets, the summary in the sheet is at the top and the individual schemes are laid out below it. Each individual scheme needs a name from you, so that we can recognize it and tie it up to the description in your financial commentary and strategic plan, and then a set of costs which are recurrent and non-recurrent, and a set of income generation income changes which we hope are recurrent. And in this way you can enter the descriptions and the financial impacts of 5 different schemes, and the net effect is presented at the top. One further analysis is asked for, and that is to what extent do detailed plans exist for these revenue generation schemes, and how much are yet to be decided. Fine. If I just enter a very simple scheme here, effectively the income is recurrent. We expect it to generate 0.2 in the first quarter, 0.5 in the second quarter, and less in the third, and even less in the fourth, but then to be recurrent in that this amount, 1.4 million, will then appear in the income stream in each year. And I'll demonstrate that by going to the mental health block revenue, which is where I just happened to enter this. All these are treated in exactly the same way. And within here I will see the effect of revenue generation schemes, 1.4 million of income in the first year, and that acts as a baseline for the second year and third year. So each year's income is increased by 1.4 million, and you can see that even more clearly if we go to the statement of comprehensive income and we look on the line for income from mental health block contracts, and you see that 1.4 million is there. Now the effect you'll see here is that it's been spread evenly across the year. That arises because the mental health block plan income is by default spread across each quarter in exactly the same amount, despite the fact you've planned it specifically for a different profile in your revenue generation scheme. I'm afraid that's an extra complication we weren't able to add in time for the release. Now if I go through some expenses, and if I make it say the drugs expense, and we're looking at negative expenses here, you'll see I've entered that all as recurrent, but if there's a single one-off setup cost, enter that as a non-recurrent. So we have a more typical look of a MQ generation or revenue generation scheme, in that there is a setup cost, there's an ongoing cost, and there's an income stream arising from it. Much of the costs are recurrent, some costs are non-recurrent. Let's go and see what that's done on the drugs costs sheet. On the drugs cost sheet, the total amount of drugs expense increase has been shown, but the next year the non-recurrent part of the SIPs and revenue generation schemes have been removed. So whereas the first year's cost is shown as 1.1, the next year's cost is 0.7. And if we go back to the revenue generation scheme, you'll see that first year's cost net 0.7, 0.4, of which is not recurrent. That's drives 0.7 and 0.4, just 0.7. Okay, and that works for each of these recurrent and non-recurrent lines in each of these operating expense areas. And on that way you can see the effect profiled and the effect year on year. But once again, the drugs costs themselves, once they're transferred from the revenue generation scheme, are phased according to this layout. And if you want to show a different phasing, then you can certainly do so by just typing in different phasing here. So there, that phasing shows a bias towards the first part of the year. If we go to the statement of comprehensive income and we look at drugs costs, you'll find the bias to the start of the year is reflected there, and those figures reflect the figures there. Okay, I hope that's explained revenue generation schemes. Thank you for watching this.